Welcome to my next video. In this video, we will be talking about taxes. We will be talking about what you need to know about the W-4 form and the Form 1040. This is the second video in a two-part series on taxes. In the first video in the series, we talked about what is the goal of taxes? Why are tax rules so screwed up? How do you make the best of the tax rules? If you've not already seen it, you may want to go back and look at that first video. But first, what I say in this video is based upon my education, my life experiences, and my values. What I say in this video is for typical people in typical situations. It is not for all people in all situations. If it was, this video would be hours or even days long. My goal and hope is that by the end of this video, you will know more about taxes and you will be able to make better decisions for your life. Many of us are employees. And when you start work as an employee, you fill out a W-4 form. Depending on how you fill this form out, you will have a different amount of income taxes taken out of every paycheck. But here's the key thing. How you fill out the W-4 form, the amount of income taxes taken out of every paycheck, that does not change what your total taxes are for the year. The taxes taken out of every paycheck are just a prepayment of that tax bill. So how should you fill out the W-4 form? Well, some people like to get a big tax refund when they file their tax return. If you are like that, then you want to fill out the W-4 form to make sure that they're withholding everything they need to withhold, and then they're withholding even more. They're taking even more out of your paycheck than what actually needs to be taken out. For some people, this can be a good way of forced savings. On the other hand, if you're a person who just more or less likes to break even when you file your tax return, you should just pay attention to the instructions of the Form W-4 and try to fill it out as carefully as you can. If you're in a complicated situation where you have more than one job at the same time, or you're part of a couple and both of you work, be sure to pay a lot of close attention to the instructions, and you should end up pretty close to break even at the end of the year. All of us have to think about filing a tax return every year. And the government's kind of snoopy. They want to know if you were married or single. But they only want to know if you were married or single on December 31st. Your marital status on December 31st determines how you file a tax return. If you were married on December 31st, your choices are married filing jointly or married filing separate. Married filing jointly is when both people in a couple put all their taxable income on one tax return. Married filing separate is when each person in a couple puts their own income on their own tax return. So which one will end up with a couple having the most money after they pay their taxes? Well, like a lot of things in tax, it gets complicated pretty quickly. Very generally, if you're a married couple and you live in a community property state, or both of you work outside the home, then you will probably pay less in taxes, and you will probably have more money after paying your taxes if you use a filing status of married filing jointly. Other than that, there really is no general guidelines. You can compute it both ways every year and just choose whichever way gives you the most money after taxes. What if you were single on December 31st? Well, if you're single on December 31st, your choices for filing a tax return are you can file as single or you can file as head of household. And generally, you will pay less in tax and you will have more money left over after you pay your taxes if you can file as head of household. So, what's a head of household? I know what a single person is. I know what a married person is. But what's head of household? Well, generally, a head of household is a person who provides most of the money for a family member who lives with the single person in the family home. If you are a single parent, it's pretty likely you're a head of household. When you file a tax return every year, you have another choice, and that is a choice between taking what's called a standard deduction or itemizing deductions. Now, a standard deduction is sort of a minimum set amount of itemized deductions. You get a standard deduction even if everybody agrees that in reality your itemized deductions were zero. So how much do you get for a standard deduction? Well, in the year 2020, if you file a tax return as single, your standard deduction is $12,400. In the year 2020, if a couple files a tax return with a married filing jointly tax return status, they get a standard deduction of $24,800. So that's a standard deduction. What about the alternative? Well, itemized deductions are certain expenses that you get to take on your tax return if you itemize your deductions. The big ones are normally interest on your home mortgage and taxes that you pay to state or local governments. So what you can do each year, if you want to, is you can add up your itemized deductions and compare them to your standard deduction and just take whichever one is more. Now, generally, most people are going to pay less in taxes and end up with more money after taxes if they take a standard deduction, unless they either have interest on a home mortgage or they've paid large amounts of taxes to state or local governments. But every year it's your choice. You can choose a standard deduction or itemizing your deductions. A lot of people prepare their tax return by going online or using some software. And this can work great if you keep in mind two things. The first thing to keep in mind is who the software was designed for. If you're an employee, you own your home, you have some investment income, great. The software was designed for you, use it. On the other hand, if you're self-employed, you work in 3 different countries around the world every year, earning your income, don't use the software. It was not designed for you. The second thing you want to keep in mind is that you always want to understand the questions that you are being asked. If you don't understand the question, do not guess. If you start guessing at questions you don't understand, you likely will end up with a very bizarre and very wrong tax return. If you are asked a question and you don't really understand what the question means, I would recommend that you start looking at the help menus, you start looking at other resources, and you really try to understand the question. So if you understand the questions you're asked, if you are the person that the software was designed for, doing your taxes this way can make a lot of sense. What if you want a real person to help you prepare your taxes? Well, you have a couple of alternatives. You can go to the IRS website, that is irs.gov. You go to the IRS website and you can search for free tax return preparation. And that will give you a page with a couple of links to different nationwide networks of volunteers. And these volunteers can help some people prepare their tax returns for free. Alternatively, you can just pay money to hire an expert to help you prepare your tax return. If you do choose to do that, I do have a video on experts, on how to hire an expert and how to deal with an expert you may want to check out. In this video, we learn more about taxes, and we learn more about what you need to know about the W-4 and the 1040. If you want to learn more, be sure to check out my other videos. Until the next video, always remember that you are the best person in the world to decide what is important for you. Thank you for watching. Please click the button to subscribe. I hope that you got something from this video. If you did, please give it a thumbs up and comment. Please check out my channel, playlists, and other videos. Have a great day.